Ladies and gentlemen, good day and welcome to Elecon Engineering Company Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vinay Sada from Ernst & Young LLP. Thank you, and over to you, sir.
Thank you, Vivian. Good day to all the participants on the call, and thanks for joining this Q4 and full year FY23 earnings call for Elecon Engineering. Please note that we have mailed out the results and presentation, and you can also see the results on our website as well as it has been uploaded in the stock exchanges. In case if you have not received the same, you can write to us and we'll be happy to send this thing over to you. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risks that could cause future result, performance, or achievement to differ significantly from what is expressed or implied by such forward-looking statements. To take us through the results of this quarter and answer your questions, we have with us the management of Elecon Engineering, represented by Mr. Prayasvin Patel, CMD, Mr. Ayush Shah, Non-Executive Director, Mr. Kamlesh Shah, Group CFO, Mr. Narasimhan Raghunathan, CFO, Mr. M.M. Nanda, Head of Gear Division, Mr. P.K. Vasin, Head of MHE Division, and Mr. Vrajlal Sanjalia, Head of R&D Department. We'll have the management give a brief overview of the quarter gone past, and then we'll open the floor to Q&A session. With that said, I'll now hand over the call to Mr. Prayasvin Patel. Over to you, sir.
Thank you. Good evening, everyone. A very warm welcome to our Q4 and full year FY 2023 conference call. I hope all of you have had a chance to go through our results and presentation. We are pleased to report that we have achieved another quarter of strong financial performance, driven by our team's dedication and hard work, and we expect the growth momentum to sustain in the coming years. As we look forward towards the future, the global economy continues to face some uncertainties and challenges in the form of inflation and supply chain disruptions. However, we remain confident in our ability to navigate these challenges and continue to deliver value to our customers and investors. Looking specifically at India, we are optimistic about the country's economic growth prospects for FY24. According to RBI estimates, India's GDP is expected to grow at 6.5%, driven by favorable government policies, strong domestic demand, huge spending in infrastructure, spelled out in recent budget, better tax collection, and a rebound in exports. We are well positioned to capitalize on these opportunities and are committed to drive in long-term sustainable growth for our stakeholders and retain our consolidated revenue target of rupees 2,000 crores with EBITDA at 22% for FY24. Now, coming to our new product development initiatives. Our primary objective is to generate innovative ideas that satisfy our customers' needs while optimizing costs and enhancing product performance. In FY23, we made significant strides in new product development and upgradation, introducing 6 products that include high-speed gearboxes, central drive planetary gearboxes, roller press gearboxes, vertical roller mill gearboxes, dual tandem gearbox, and sugar planetary gearboxes. Our efforts have been met with satisfaction, and we are proud to continue pushing the boundaries of innovation. We recently launched the second generation of Eon series, which is designed for the use in a range of industries including steel, power, chemical, oil and gas, rubber and plastics, material and mining, paper and pulp, industrial cranes, and water treatment. This EON series will be beneficial for our customers considering operational cost optimization and for the company considering inventory optimization due to standardization, faster deliveries to cater to exports and urgent need of customers. The government's growing attention towards infrastructure is expected to stimulate the capex cycle in cement and steel sectors, thus benefiting our company. Our focus moving forward is to maintain engagement with OEMs in the Western countries market, particularly focus on European market and establish ourselves as their preferred supplier. Inflation and supply chain issues in the European market is posing serious challenge and sustainability issues to the local players, and it puts us in an advantageous position to capitalize on this opportunity. Elecon is proud to be a leader in customized and complex gear manufacturing segment for defense, particularly for the Indian Navy. This is a testament of our technological and manufacturing prowess. With our expertise in working with high precision machine tools, we are actively seeking out niche areas that demand specialized equipment or components. The strategic initiatives undertaken by our company have led to a remarkable turnaround in the material handling business, resulting in profitability after struggling for over 5 years. The strong order inquiries have translated into robust order book for the division, driven by replacement and upgradation requirements, as well as new orders from power and other end-user industries. Our extensive product range is one of the widest in the market, and we plan to introduce a few more products to cater to industries where we are not currently present. Given the visibility and momentum of new projects, we believe that there is a significant potential for growth in the division while maintaining healthy margins. Last but not the least, our unwavering dedication to ESG continues to be our top priority as we strive to make a positive impact on all our stakeholders. ESG initiatives remain at the forefront of our company's agenda, and we remain committed to engaging in sustainable business practices that benefit not only the environment but also our communities and employees. Thank you for your continued support as we work towards a better tomorrow. Thank you.
Sir, should we begin the question and answer session?
Yes, please.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We request participants to kindly restrict your questions to 2 per participant. The first question is from the line of Ankit Babel from Shubham Ventures. Kindly proceed.
Yeah, good evening, sir. A couple of questions. Sir, you guys have been under discussion since last several months with overseas OEMs for approval of your products. What is the current status, and by when can we expect 1 or 2 such approvals to come in?
Let me put it this way, that approvals for products in the foreign market is a constant thing because you are always looking for new customers, and for these new customers you have to get various approvals. Normally, they look at your references and your past experiences before approval. And quite often, they send also the team to come and have a look at the manufacturing facilities and capabilities of the company. This is an ongoing thing. We've got many approvals apart from this because of our wide experience in India as well as abroad. It is very easy for us to normally get approvals of this kind with the customers. So those approvals come in quite easily. Okay, and normally it takes hardly 15 to 20 days maximum to get those approvals.
So my question was, any major approval wherein the revenue visibility from a particular customer goes to say around 50-100 crores kind of an potential, those kind of approvals have you received?
Yes, recently we've had a significant approval from one of the large paper and pulp machinery manufacturer who is one of the largest in the world. So that approval has come through from Europe. But apart from that, we were also supplying them equipment from India for their plants in the Asian region.
Okay, so my second question is, was there any one-off expenses or any one-off income in your Q4 numbers?
Yeah, we have that. I think I'll just, in regard to raw material cost, we have the one-off kind of things which is related to GST input credit of our other states other than Gujarat, where our utilization is very slow and which is going to take some time. So as a conservative approach, we have made a provision for 7.28 crore. Plus we were having nearly 2.5 crore of inventory, which was required for the service and after-sales service requirement. So those inventories are having more than 2 years. So as a conservative approach, considering the visibility, we have made a provision of 2.5 crore for that. So that is, the two things which is there for the raw material consumption. And in case of the manufacturing cost, we had, some high cost consumption of material, which are having its own cycle like oil, base frame, those kind of expenses, which are incurred in Q4 this time, which will have its own cycle of, replacement.
Okay, and any one-off incomes?
We have the income in case of the write back which is there, which is to the tune of rupees 2.6 crore, which was related to the liability of earlier period, which was not required. Then we were having the another income in the form of a contractual obligation. As you know, we have closed all our old projects in MHE division, and for where we were having certain contractual obligation provision we made as a conservative approach, that was not required anymore. And plus some warranty was there. That also, we completed the warranty period. So both put together is coming to nearly 8 crore plus.
Okay, so net to net, 10 crores of one-off expenses and 8 crores of one-off income. So net of 2 crores of one-off expenses. Is that right way to look at it?
Yeah, and one more thing is that we have had a one-off kind of bad debt of nearly 4.28 crore, which is a part of our settlement agreement with one of the customers, which we recently did in Q4. So that is 4.38 crore.
So 4.38 crores is bad debts?
Bad debts. One of the bad debts is a part of the settlement agreement with the customer.
Okay, so 6.5 crores net is the one-off expenses.
Correct.
Okay, I'll get back in the queue, sir. Thank you.
Thank you. The next question is from the line of Gunjan Kabra from Niveshaay. Kindly proceed.
Congratulations for a good set of numbers, but I had one question. In the presentation, you have guided around revenue guidance, which is 1,700 crores, and in the bar graph just below it, it's 2,000 crores of revenue that we are targeting in FY24. So, what kind of revenue, like in the last 3 quarters, we were of the very firm belief that we'll be touching 2,000 crores. So, are we seeing any kind of slow growth rate?
No, I think if you refer that presentation speaks about the gear for 1700 crore.
Okay.
And 300 crore is MHE. So if you have referred to, our presentation on the left-hand side, the gear sign is there. MHE is, above, on the top. So MHE is different and gear is different. So 1700 crore, what you talk about is gear only.
So 1700 plus 300 turns out to be 2000.
So we are still maintaining our growth guidance of 2,000 crores.
Yes.
Also, one thing is that in the beginning of the presentation, you guided there is an export headwinds due to supply chain disruptions. But in the recent interview that you did yesterday, so there you guided the export percentage is expected to increase to 40%. So are we planning to gain any share, or how is it? I mean, how are we seeing the demand there?
What we are trying to say is that the Europeans are having these challenges while we don't have these challenges. So we are likely to grow while they are likely to remain stagnant. So we have an opportunity. We are going to grow from 30 to 40% while we see opportunity situation in Europe.
And if I just further add to this, so that, if you see our presentation, we are talking about two things. Our overseas business plus export, both put together is 29%.
Correct.
So that is how we speak about our overseas business and exports. So when we talk about export is our export from India as well as our overseas business, which is there.
So good luck so good luck.
Thank you.
Thank you. The next question is from the line of Pratik Kothari from Unique PMS. Kindly proceed.
Hi, good afternoon, and first of all, congratulations to the team for such a fantastic performance.
Thank you.
So my first question on the 6 new products which we have upgraded or released. As a layman, if you can just help us understand how does this new product help our clients, help our customers? How does it help Elecon? I mean, just some technical and market potential for this product, please.
So, Mr. Head of our R&D, Mr. Vaju, he will just answer the question.
Yes. Hello. Good evening. Just producing the new product or introducing the new product in the market, we are constantly looking for the market requirement as well as from the customer point of view. So nowadays the efficiency is more important from the customer point of view. So we are optimizing our product. We are always boosting or providing the high efficiency product and the high quality product. So we are upgrading our product as well as we are introducing new product to generate the new revenue.
Can I answer this in a different way? First of all, there are products which meet the requirements of the customer, and then there are new developments that take place because the processes of the plants go through a change. There are improvements in the process to bring in efficiency overall in manufacturing, let's say cement, steel, etc. And for that, there are new applications that get generated. There also we get involved in new developments, which then are transferred to other customers in similar kind of businesses. So these all products that have been developed recently will give additional opportunities to us in bringing down the cost in manufacturing for us, as well as meeting the requirements of the customer. Optimizing is the way to go in this.
Fair enough. Good to know, sir. So my second question is on the MHE, and I'm asking this in the context of recently ThyssenKrupp announcing or guiding for some 25% growth in the coming year. Indian Railways talking about adding more wagon tipplers to their pipeline. Coal India wants to increase its production by 50% over the next 2-3 years. So can this be a dark horse which and which can maybe surprise us on the upside? Just your outlook on MHE and given the bad experience that we have had for the last 5-10 years, are we prepared if such opportunity comes in for us to capture?
Definitely. As a matter of fact, we are sharpening our claws to make a kill. So we are definitely looking at these opportunities. While we sell our products, we want to make sure that we don't let any opportunities go by where we can manufacture and deliver things where we can make profits.
Good to know, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Shikha from Equity Capital. Kindly proceed.
Good afternoon, sir. Congratulations on a great set of numbers. I had a few questions. I had a few bookkeeping questions, sir. One is a follow-up to what you already said about the one-off expenses on the gross profit side. So is that the only reason for an increase in cost of goods, or is there any other reason? Because quarter on quarter, it's gone from 44 to around 50%.
Yeah, no, that is the only cause for this year when you see the reduction in the gross margin.
So that is the only reason for the reduction of the gross margin, right?
Yeah.
Sir, on the employee cost, is there anything specific why our employee cost has come down so substantially quarter on quarter?
Yeah.
And even year on year?
Yeah. The reason is one, because when we were making a provision on a quarter-on-quarter basis for gratuity and leave encashment, that we are doing the estimate based on the previous year and whatever the increment or the appraisal process, taken care for the current year. But while we did that actual valuation at the end of the year, then we find that, instead of having the liability, we are generating an asset for a gratuity and leave encashment. So if you could refer our, the balance sheet, in that the provision for gratuity last year it was there. This year, instead of having the provision or liability, it is an asset for us. That is one of the reasons which is, both put together is coming to nearly 1.787 crore. And then we generally are doing the provision for the performance bonus on a quarter-on-quarter basis. But when we work out at the end of the year, so that was not work out to that level, and that is also having the impact of nearly 1 crore for that. So both put together is coming to nearly 2.87, you can say rounding of 3 crore for this.
Okay, understood. And sir, if I could just push in another question, can you give me a utilization levels on the MHE and on the gear business currently for the year?
So our utilization for gear is 70% plus capacity utilization.
Okay.
In MHE we have the ample space available for the capacity to utilize. So there I think presently considering our strategy, so we are at least present our utilization is nearly 30 to 40%.
Okay, but so without any major capex coming this year, how do we expect to do 1,700 on the gear side?
So far as the capex is concerned, we have to build some of the machinery because all the machines do not have the same capacity of manufacturing. So though we may not have to go major capex, but somewhere we have to fill the gap for the machines capacity or tooling capacity. So if you have heard our earlier calls, this year we are planning to have the capex of nearly 100 crore, and our that is what we have planned over the period of 2 years.
Right.
Based on the revenue visibility and other processes, we are just do the execution of this capex plan.
But so the 100 crore capex will come FY25 onwards, right? Or will that start showing up in FY24 itself?
So it will be there in this year also. That is the new year to 2023-24 also.
Okay. So how much will be visible in FY24?
24, we are estimating that capex of nearly 50 to 60 crore.
Okay, and this will be again utilized in FY24?
No, it will get utilized from FY25. Because in FY24 we will install the machine, but the full utilization will be in the next year, FY25.
Okay. And on our current machinery, we can utilize how much capacity max?
We can go up to 85% to 90%, not beyond that, because something will not be always, we can ask for the maximize, but we can optimize up to 85%, ideally.
Okay. And on that capacity, so on around 90% capacity, how much revenue does it turn out to be?
We can generate another, suppose today we are at 1,000 crore, then we can additionally generate another 300 crore for that. And if you do some more optimization by outsourcing some of the activities, we can go up to 1,400 to 1,500 crore.
Okay, but so on a geo business, we're saying we'll do 1,700. So the balance will come from where? Then overseas, is it? Or how will that be?
Pardon, I can't get your question, please.
So on our current capacity, you said by outsourcing and certain debottlenecking or whatever, we can reach around 1,500. So the balance 200 that we're expecting on our gear business, from where will that come?
That, as such, our overseas are self-sufficient to do the assembly work and other things.
Okay, so 200 or 300 on the gear business we're expecting overseas, right?
That 1,500 what you are talking, that we are talking on gear.
Right.
Yeah.
Okay, got it. Understood. Thank you.
Thank you. The next question is from the line of Sunil Kothari from Unique PMS. Can we proceed?
Thanks for the opportunity. Congratulations, President and team, for such a good number.
Thank you.
On the board and on call also. Really great to be.
Thank you.
Sir, my question to President is, during last 2, 3, 4 years, whatever problem we were facing during of last 1 decade, we have successfully and very successfully completed all the achievements and goals we were having, like loss-making projects were removed, debt has been reduced, or almost we are cash positive. So what is your overall objective for next 1, 2, 3 years, where you feel internally you can improve, or where you feel your time you will be devoting for Elecon Engineering, where you feel it's prepared for maybe next 5, 7 years?
It's a very good question, because I would have expected this from at least investors who are planning to be with us on a long-term basis. The interesting part is that now that we have achieved more or less all our goals, our intention would be to develop certain products which today we are not there. Though we have one of the widest range of products in the gear industry, there are few products which are missing, which I believe we should develop them. That is one. The other one would be to look for opportunities abroad for further growing our businesses. Because we should not be a domestic player. We now need to be a global player who has presence in very many countries. Because that is the way to go, and that is the way to hedge against a recession which could be limited to a particular country. So the intention would be that you expand or grow in countries where you see high potential. I would say that Europe and the United States are areas where we need to look for other opportunities and grow our businesses. So look for acquisitions, look for strategic tie-ups, and so forth. Because we would like to grow and grow at a reasonably good rate. Sunil bhai, does that answer your question?
Yeah. Sir, so where you feel for preparing for those opportunities, what we require to do internally, maybe in terms of R&D division, design department, asset, software side, hardware side, which are the area where you feel you require to invest and increase those capabilities?
Basically, I would put it this way, that as long as R&D is concerned, we are very well equipped. As a matter of fact, technologically, we are so advanced that we can sell technology to other countries, even in Europe and United States. Okay. So, competency-wise, we are, I would say, second to none. As long as the challenges that we would come across would be manpower of our own, which would be at the senior level, as well as competent people in manufacturing and in financial services.
So those will be the focus area of yours.
Yes, and those are the areas where we are trying to develop a team which would be ready in case there are opportunities that would arise, then we would deploy them in the international arena wherever there is a need.
Great, sir. Wish you good luck and thank you very much.
Thank you.
Thank you. The next question is from the line of Naisar Parekh from Native Capital. Kindly proceed.
Yeah, hi. Thank you for the opportunity. So first question is on the replacement market, or the aftermarket, on the aftermarket side. So what percentage would be aftermarket for you? And secondly, when you look at your years, how much of that is actually new customer, new installations versus replacement of some of the older gears?
No. Normally, our replacement market constitutes anywhere between 20 to 30%. Okay. The new customers, I would put it this way, that almost 70% of our customers are repeated. But there is always a hunt to look for new opportunities, new customers, to bring them in our fold, even to bring the competitors' customers into our fold so that we can grow our business.
Got it. Understood. And do you, on the replacement side, right, do you track, say, if installed, say, 100 gears and 100 are getting replaced this year, out of that, how much actually came to you versus how much went to competition? Like, what percentage is your repeat rate or something on things that are getting replaced?
Normally, 90% of the customers who have originally bought the gearbox from Elecon would come back to Elecon. Okay, 90, maybe more than 95% of them would be coming back to the same manufacturer, because there are peculiarities, and therefore the customer, if the installation is very critical, he will not take any chances. It is the same as in automobile. You normally go back to the manufacturer to buy the spare parts. Something similar to that.
Got it. And last question, just on you mentioned on the marine side as well as on the EV side, that obviously discussions are going on and things like that. So any update on those two verticals?
Yes, on the marine side, we've had some opportunities that we have been able to harness in Europe, where there are companies who want to get their products manufactured by us. We've developed a few models for them, and they seem to be highly pleased. And the opportunities look to be promising. However, on the domestic front also, we see a good opportunity coming our way. Okay. Even on the defense side, the Indian Navy intends to reorder certain ships identical or similar to the ones that have been supplied in the past, where we would become the preferred gearbox supplier. So the opportunities seem to be quite high. As long as the commercial ships are concerned, as I told you, it is getting materialized. As long as Navy is concerned, it may take some time before it actually comes out.
Got it. And anything on EV?
Okay. Sorry, I'm sorry. Can you please repeat that sentence?
Sorry, I was saying anything on EV, on the EV side?
EV side, not really, because though we have been trying to make inroads, the sizes seem to be a bit smaller for us, considering that they want to manufacture them in mass scale. The size, we normally produce much larger diameter of gears compared to what they would require.
Okay. Got it. Thank you so much. And all the very best.
Thank you.
Thank you. The next question is from the line of Mahesh Dendre from LIC Mutual Fund. Can we proceed?
Sir, thank you so much for the opportunity. So this year we have done revenue for around 1,500 crores, and next year we are talking about 2,000 crores. So incrementally 500 crores of revenue, I mean, from where we plan to add this? Is it domestic market, international market? So just a broad view.
Naturally, it is going to come from both. Okay. The domestic market is where we see that the sector would give us reasonably good orders, because there are new requirements that have come up, project orders, which would help us boost our turnover to a large extent, as well as exports would also give us a big thrust in the foreign markets further.
So these orders are in hand, or probably we think we will get these orders in this quarter or next quarter?
These orders are not in hand, but we are a preferred supplier to the clients who have got these orders. Which means the companies who have got these orders, for them we are one of the preferred suppliers, and we have supplied them similar kind of gearboxes in the past, and they seem to be extremely happy with our delivery and performance of the gear units, and therefore we feel very strongly that they would be finalized in our favor.
Sure, sir. Thank you so much, sir.
Thank you. The next question is from the line of Divesh Mehta from Dinero Capital. Kindly proceed.
Thanks for the opportunity. So just wanted to understand, since we have launched 6 new products, so we have 2 categories of products, like catalog division also and an intermediate division also. The engineer division is around 55 to 60% of our overall sales, and it's a high margin product. So sir, can you help us to understand that these 6 new products falls into which category?
They fall into both categories. The Eon series is the catalog products, while all the others fall into the specialized product category.
Okay. And so one more thing I wanted to understand, since we are entering into all these new products, so our competitors like Shanti Gas, Flender, SCW, Premier, all these companies, they
they are already there into these categories. We are going into completely a different new set of products.
Unfortunately, as I told you earlier, we have one of the widest range. Yes, they are all into catalog gears for sure, but we have a high level of specialization, like the vertical roller mill gearboxes. We are only competing with Flender. Then the dual tandem gearboxes, we only compete with Flender. So there are planetary gearboxes, we only compete with premium. So though we are there in each and every type and variety, our competition quite often is limited to one or two, and they need not be the same party all the time. So, and we also are focusing a lot on import substitution, and we make gearboxes which quite often are not possible for the other manufacturers to manufacture.
Okay. So that falls into the engineered product. So what we are looking into the OEM tires in the overseas market, that would be mainly into the engineered products then?
Yes.
Okay. And sir, one last question. Can you help me to understand the sector-wise sales in this last quarter? So how we have panned out in terms of power, cement, steel, sugar?
So last quarter we don't have the the sector-wise sales, but I think I'll keep a note of that and forward through Binay for this.
No.
For the whole year.
Okay. So can you help me with that figure also? That's fine.
Yeah. At the console level, if you see in the gears, our one of the major contributor was steel, from where we got a 13.8% sales. From sugar, 6.8%, cement, 9.7%, power, 8.1%, MH, marine handling equipment, 7%. And marine was, and the mining was a 3.7%.
Okay. Thank you, sir. That's it from
But we will send you a pie chart if required by email.
Yeah.
It is there in the presentation also.
Okay. Thank you.
Thank you. The next question is from the line of Sonali Shah from MK Investment Managers. Kindly proceed.
Yeah, hi. Thank you so much for the opportunity. So first question is, our order book for the gears division has been flat since the last 3 quarters or so. Is there some kind of challenge in getting new orders, incremental orders over here? And what seems to be giving us the confidence, since our order book is not growing, what is giving us the confidence of achieving 1,700 crores of top line for gears in FY24?
Madam, I don't understand how you are saying it is flat. Because, if the orders are not there, how are we going to produce so much? So,
I just mean from the perspective that our closing book for F23 has been 570 crores for gears division, and at the beginning of the year around, we were also around 500 odd crores.
The reason is normally the spillover, we have a very fast turnaround. So the float that we see of 500 crores, 569 crores is a very healthy float. Because you don't want too many, because if the prices of steel keep on varying, then you have a risk of, increasing your COGS. On the other hand, you don't want less number of orders, so because then you can't plan your production properly. So this is an ideal set, and which suits us.
So in our catalog product, yeah, please, Mr. Nanda will just say about our gear.
Catalog product we are able to deliver within 2 weeks time, basically. That also is the major change which has really brought in our catalog area, basically. So that has really turn around very fast, So that's why you are looking at these numbers, wavering on that, That's how it is. But as Chairman has mentioned, our order book position at the end of the year is very healthy, and going forward we should have, we'll continue on the same line,
All right, so fair enough. And second is actually more of a clarification. If I was to merely back calculate the numbers of 2,000 crores, so for our gears division in the domestic business, X of exports, are we expecting only 900 crores of top line for F24, which is nearly a 3% YOY growth?
No. How you calculate, I don't know from where you got the number. Our projection for the year is 1,700 crore.
Yes, 1,700 crore would be inclusive my overseas subsidiary for gears as well as my exports, right?
No, yeah, correct. Yes.
So if I recollect correctly, you had mentioned in a few quarters back in one of the con calls that we'll be doing around 1,500 crores of top line in a standalone level in F24 and 500 crores at a console level. Oh, sorry. So that's total 2,000 crores.
Yeah, that 1,500 crore includes my energy division also, no?
Yes. So if I was to strip away the energy division,
then it is 1,200 crore.
Yes, and then if I account for, because you also mentioned that exports plus overseas will end up going to around 40% in F24. So if I was to strip that away, I'll end up with only 900 crores of top line for the domestic gears division.
For this year or next year you are talking about?
For FY24.
No, FY24 we are going to end up our gear at 1,200 crore on a standalone basis. And standalone.
Standalone. That's exports plus my domestic in India business, correct?
Yeah, correct.
All right, great. Thank you so much, sir.
Thank you. The next question is from the line of Mohit Kumar from ICICI Securities. Kindly proceed.
Good evening, sir, and congratulations on a very good quarter and a fantastic year.
Mr. Kumar, sorry to interrupt, sir. Can't hear you clearly.
Am I audible?
Yeah.
Am I audible now? Yes.
Yes, I can hear you.
Is there any opportunity in the adjacent product segment or to enter into a new customer segment? And the related question is, do you think the wind and power segment will pick up in FY24 and FY25 materially for you?
Power segment, yes. In the wind segment, we have purposely exited from that area, and the reason being that it is a very risky business. Therefore, after indulging into it, we ultimately decided that we wanted to exit that business, and we have been able to do so without getting ourselves hurt.
I'm asking this question because wind is supposed likely to make a likely to pick up going forward. So I'm trying to figure out whether this is a very large opportunity or would you like to re-enter the segment?
We would not like to re-enter the segment. The reason being that, first of all, as you know, wind is subsidized by the government, okay, because on its own it is not able to hold grounds unless it is subsidized, and it depends on the government policies. Apart from that, we have seen wide fluctuations in demand, which also causes a lot of issues.
Understood. Sir, my second question, what was the total market size for the gear in FY23 and what are the market share? And the related question is that how much is the import of gears in the domestic market? If you have that number ready.
Can we send it to you by email?
Sure, sir. Those are my two questions, sir. Thank you for answering.
All I can say is that we have 34% of the organized market in India. Okay. So if you extrapolate, you will know that how much is the overall organized market in India. And the import figures we do not have handy, but one can always pull them out and send it to you.
But sir, is it possible to substitute this entirely in this country, or do you think that import basket, a large part will still be imported?
I wouldn't say that a very large part is being imported. Majority of the parts which are the gearboxes which are being imported are the wind turbine gearboxes, as well as extremely large cement gear units, which are being imported.
Understood, sir. Thank you, sir. Thank you, and best of luck, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Ankur Kumar from Alpha Capital. Kindly proceed.
Hello, sir. Congrats for a very good set of numbers. So my first question is on the capital allocation plan. So we are now debt-free. We are making great cash flow from operations. We don't have much capex plans also for the next 2 years. So, but this year we haven't given much dividend. So any thoughts on, do you want to increase dividend, or we look for some M&A for the growth in exports?
I thought that we gave good dividends. 100% is not a good dividend.
Sir, I mean in terms of dividend payout ratio, so compared to EPS.
That's true. I would put it this way, that though me being one of the largest shareholder, we believe in being a bit conservative, because what we believe is that if the company retains cash, then if there are other opportunities that come their way, then we would be able to deploy them. Okay, whether it is any type of requirements in an urgency or on a normal level. So that is the reason why we are going a bit slow. But I'm sure that we will fall in line and improve our dividend payout ratio over a period of time.
Sure, sir. That's great to know. And so second question is on this guidance of 2,000 crore revenue. This basically means 500 crore per quarter. But in this year, we haven't done 500 in any of the quarters, even not in our best quarter. So do you think this 500 can be for the next year, or you think this will be H2 heavy and that things will faster in H2?
It will catch momentum over a period of time. So I believe that you will start seeing the improvements after the first or after 1.5 quarters.
Because, sir, in generally you were saying that Q2 and Q4 are heavy, so that is will continue in FY24 also?
Yes. Normally, it is like the IP, always the last few overs are very critical.
Sure, sir. And sir, on margin, can we make some improvements, or do you think this 22% will sustain, or can we improve because now things are looking up?
Margins will hover around 22%. I mean, if they increase, they will increase by 1 or 2 points maximum. Okay. The reason being that while you keep on trying to improve your top line, the utilization benefits have already been derived. Plus, it will also depend on the product mix.
Sure, sir. Thank you and all the best.
The other thing is sorry. Okay.
Thank you. The next question is from the line of Vikram Datwani from Nuvama Wealth Management. Kindly proceed.
Good evening and congratulations on a strong quarter. I have 2 questions. First one is a data point with a follow-up. Could you please share the subsidiary order inflow number for the quarter? As in the last quarter, we mentioned due to the holiday period, we saw lesser order booking than we would have liked. So has that situation improved?
Yeah. Our overseas, pending order position and March 31st, it is 80 crore we got that.
Okay, thank you. And my second question is on the margins in the subsidiary business. So if I look at the margins in this quarter, it seems like they took a slight dip. So how should we look at this going forward? Were there any one-time costs related to ramping up of operations that impacted margins this quarter?
No, it is not because of any one-time cost in the overseas market. There is nothing such kind of thing. But if you have heard that in overseas market, the inflation has gone up. So certain costs have also gone up in the process, which is very minimal. And at the same time, there are also challenges in the European countries. So considering that, we were having this. And further, we had some business development costs also over there. And we have put some marketing team. We started, building marketing team in the overseas. So that is, just having the impact in the overseas.
So do we see this margin normalizing going forward? That what % would you say?
Next year our guidance is 22% because we are now going for on a business development and a marketing strategy in overseas where we have to spend. We also have to depute some key employees over there to search the new opportunities and new markets. So we also have some costs related to the employees in current year, that's FY23-24 for that also. So going forward, yeah, definitely once we get stabilized in terms of our efforts for marketing, we can expect that improvement in the margin. However, because we are looking for the OEM supplies going forward, so OEM will not have the same margin what generally we are looking for in the replacement market. So it will not have that kind of, the improvement based on the improvement in the sales. That's what it is I can say here.
Okay, thank you for taking my questions and all the best.
Thank you.
Thank you. The next question is from the line of Ria from Equicus Investment. Kindly proceed.
Hello. Thank you for giving me the opportunity. My first question is in regard to the current pipeline. What is the order backlog and what is the order inflow right now?
Order backlog as of 31st March 2023 is 714 crore on the console level.
And for subsidiary?
For subsidiary, it is 80 crore. 80.
80 crore. And order inflow for the quarter?
Order inflow for the quarter for the console level, it is 419 crore.
419 crore. And this is majorly, could you help me with which sectors this order book comprises of? Apart from, I think, steel and power being the major contributors, what sectors are there?
So sugar is one of them. So I don't have this complete breakup, but I can give that, the major order from the steel, cement, sugar, material handling, and power. These are the 5 sectors where it is there. But I'll just forward that, order intake for Q4 on a sector-wise also. I can forward that.
And in terms of pipeline, are we seeing it from the same sector? Or any newer sectors that are seeing?
Same thing should continue. The same trend should continue the way scenario is emerging, the order inflow will be coming from these sectors only which has been mentioned here.
But on quarter basis, there may be a fluctuation will be there based on the, how the cyclical of the industry trend it is.
Sure. Thank you so much.
Thank you. The next question is from the line of Devang Patel from Samiksha Capital. Kindly proceed.
Yeah, hi sir, on margin you mentioned some improvement can happen on the working capital also. If you can talk about how much improvement we can see. We've seen some improvement this year. Over the next 2-3 years, what kind of improvement can we see in the cash conversion cycle?
So far the working capital is concerned, we can consider between 70 to 80 days, hovering about that, considering the quarter-on-quarter basis. But I think consider engineering industry in which we are there and other factors, that 70 is an ideal thing which can do. But at least optimizing, if you have to optimize by that way, we can be between 70 to 80 anywhere.
Okay. And in the 2,000 crore consolidated revenue, how much is the revenue being generated from our overseas subsidiaries?
So overseas subsidiary here, 1,500 crore we have given a guidance, 1,500 crore at the standalone and 500 crore on the overseas.
So that will imply a steep jump in revenue from them next year?
Yeah, we are looking to the, some tractions also in the overseas. The way in which we are putting our efforts on the marketing side and business development side, we are looking for the good traction in the Western countries.
Okay. And you mentioned you're getting OEM orders. So this will be supplied from our India business or from the overseas subsidiaries?
Generally, all manufacturing will be taken care from India, and they may, we may supply finished, or it may be in the kit form where they will do the assembly over there and then supply to the customer, depend upon what the requirement of the customer it is.
Thank you.
We are equipped with both the end also.
Thank you. The next question is from the line of Anish Javalia from Girik Capital. Can you proceed?
Yeah, hi sir. Good evening and thank you for the opportunity and congratulations for a wonderful result. So my question is around the tax rate. So our tax rate has been in the range of 20-21%. So I just want to understand going forward with the increase in revenue from the international market, etc. How do you see the tax rate moving going forward, or will it continue to be in this range?
That I can't project because if you see in UK, the tax rate has increased from 19% to 25%. So that will depend. But yeah, next year it will be ranging between 21 to 25% at the console level. But at the standalone level, it will be 25% because we are in the new tax regime.
Right. Okay, sir. Thank you so much for your time. This is the only question there.
Thank you. The next question is from the line of Aksh Vora from Praj Financials. Can you proceed?
Hi, sir. Just wanted to know what's our current capacity in gears division and how do we plan to take forward from here? Because as we mentioned, we are already at around 70% utilization, and at peak we will be doing around 85 to 90%. So how's the plan in gears division? How will we be expanding the capacities, and what are our current capacities?
We normally have not explored to a large extent subcontracting. Subcontracting would give us additional capacities that would be available. There might be a requirement of certain key equipments, machine tools to be further invested in the near future as and when the requirement comes up. But I'm sure that with a minimum of investment, we would be able to up the capacity if required.
What would be our current capacity in gears division, sir?
Right now, as you said, it is at 70% utilization. And we may require some bridging equipments or machine tools, which we are planning to invest 100 crores in the next 2 years, which would help us further enhance our capacities. But I would say the maximum we could go is 85% in-house, and with subcontracting, it would be sizable increase that would be possible.
Thank you. The next question is from the line of Karthi from Suyash Advisors. Can you proceed?
Sir, good evening. Thanks very much for the very impressive commentary. I would like to engage you a bit on the comment you made about the pulp and paper machinery manufacturers whom you are in talks with. Just trying to understand the scope of this sort of an association. One is typically, who would this be? This would be the OEM himself, or would this be the EPC, the engineer, for instance? How exactly would this arrangement work? Some clarity on that would help.
Basically, we would be supplying to OEM, who would supply an entire plant, a complete comprehensive plant for manufacturing paper from pulp.
Right. And which would mean what would be the scope, sir? Say 2-3% of a project cost could accrue to you. Effectively, I'm trying to understand the number of gears that could go and the scope, different types of gears that could go.
It is difficult to say because it will depend on what kind of plant, what type of paper, etc., etc. So it is difficult to comprehend. But we would be the sole supplier of gears in that plant.
Thank you. The next question is from the line of Neeraj from White Pine Investment. Kindly proceed.
So thank you for the opportunity. Just two questions. One on the Europe market. Can you give some color on your marketing efforts in the Europe and how they are picking up?
I'm sorry, can you repeat the question? I didn't hear it.
Yes. So can you give some color on the marketing efforts that you're doing on the Europe side and how do you see picking up and approval process, etc.?
Basically, what we are trying to do is we are trying to deploy more people in the marketing, as well as we are also putting in a lot of effort to re-energize our websites, do digital marketing, do trade shows, etc., so that there is a big trust, awareness, and as I said, we are continuously knocking doors of OEMs and other customers from where we can get more business.
Okay, but your estimates were showing that you will have a reasonable traction in the export. Also, in the past, you had said that export does take 15 to 20 months of the traction to start. So is it fair to say that you have a reasonable understanding of how say maybe 6 months you'll start getting orders from the Europe side?
See, this is based on estimates. It is very difficult to comprehend as to when you will get the breakthrough from a customer.
Right.
It depends on various opportunities which are there, the orders that he has on hand, his requirements, how successful has been your competition in supplying equipments to them, etc., etc. So it's very difficult to comprehend. The intention of ours is to keep on pursuing till we find success.
Okay. So, thank you, sir, for this. And the second question on the defense side, can you give some color on when you see the order flow to start and when can large orders for the Indian defense come to you? Or when can the government start deciding on the large orders that may flow to you in future?
Well, as soon as China shakes us up, there'll be more orders coming through. What I'm trying to say is it is very difficult. The defense sector or the defense ministry has its own processes. However, what we have found with this present government is that they are more dynamic and faster than the previous governments in, ordering equipments, and therefore we are hopeful that very soon we will end up with reasonable amount of orders. And of course, Make in India is something that is making us very proud of the present government.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Well, thank you for showing great interest in our company. We have been trying to do our best. All I can say is that the economy is right now favoring us. We believe that the economy will grow at 6.5%, which will give us great opportunities for the gear sector as well as the material handling sector. And right now we are fully organized to encash the opportunities that come our way. On the other hand, the company is trying very hard to put the trust in exports because that is where the future lies. And if the company has to grow and grow in a large way, we will have to go for additional exports. And that is where I would say the company needs to focus on, but not to neglect the domestic market. So this is what the strategy is. On the other hand, Elecon, with a very strong R&D team, has been able to develop various products and continuously is trying to upgrade its technology, upgrade its products, upgrade its manufacturing setup to be at the edge of technology. We are second to none. Today, we are at a point where we can sell technology to the rest of the world. This has happened because we've had a lot of experience which has come our way because we are in a country where the population is very high and there are great opportunities that come in various fields of cement, steel, power. All this has given us great amount of experience, great amount of visibility, and I'm sure that going forward, we will be able to do much better, not only in the domestic market, but also in the international market. So thank you all for being with us, and we hope to see you on the next Concall also. Thank you.
Thank you. On behalf of Elecon Engineering Company Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.